right, we're back with you here, and the markets have been trading for about 45 minutes. Let's take a look at how they are performing so far. We'll go to the corn board, and our quotes are from bar chart, of course, and looking at that December contract on the corn, here you go. Oh, they have turned higher. They opened a penny lower. Now we're a penny and a half higher. December, 465 and a half. Well, heck, that's a new high for the day right now. The March is up 2 cents, and everything beyond it is 2 higher. Soybeans a little higher too, I'd say. We have January up 18 now at 1365 and a half. Wow, that's within a penny of its high of the day now. Things really starting to firm up. March beans now up 16 3/4 cents. Okay, well, 2 for 2. Let's take a look at wheat. Yeah, there's a whiff. We have December Chicago wheat down 4 3/4 at 570 and a half, kind of in the middle of the trading range from last night. Kansas City wheat has December now down 4 at 636 per bushel this morning. Spring wheat trade in Minneapolis, December is 4 1/4 lower there at 726 1/4. So very consistent losses, if nothing else, all across the wheat complex. Doesn't matter what exchange you're talking about. Cotton market, we're just a little bit higher today. December up 26 points. We're at 77.58 and had a high of 78 cents overnight. Kind of fell back a little bit from that. We're about 40 under that right now. And we have the one and only Chris Swift with us. He is with Swift Trading just down the road in Nashville. Always a treat on a Monday.
Yes,
you know
sir.
It's a Monday
It's a pleasure
when you're here.
Yeah.
So anyway, good to have you on board. Markets, when they opened up and finished up overnight, it was just like really tired, really boring. Now they're perking up on corn and soybeans. The wheat can't get on board yet, but what's going on?
I think a lot of it's simply due to the risk-on factor that we saw a couple of weeks ago from the Fed's inactivity on raising rates again, and that's probably kept it moving more than anything, and just haven't given anybody a reason to sell. So, you know, we all are looking for a reason to sell, and there doesn't seem to be a lot of reason out there to sell, and so you get a little gravitation higher.
Could the market just be tired of treading water and not doing anything on corn and beans, or not? Well, beans are lifting, I guess.
Beans have been rising and corn's been going down. We've been watching that spread very closely. It's been widening out again in favor of the bean market, and it may be a very slow and monotonous spread, but it seems to just be working, and I think it's just simply the fundamental situation of more corn in the ground than we do beans, and now that last WASDE report showed us we're going to have a little bit more of each one of those, then, you know, it really doesn't do much of anything.
Have you heard anything about how active farmer cash sales are after harvest here?
No, I haven't. I think that there is so many marketing programs out there that you really don't get the right off the combine, you know, downward like we used to. We used to just sell corn off the combine and that would cause the price to go down. But there's so many more marketing methods out there now that keeps it distributed out in the marketing year much more closely than just at one time.
You know, we had talked about the ultra-low river levels, and then we had that batch of rain that went through, a couple of weeks ago.
Right.
And the river levels came back up, but now I'm hearing they're going right back down right away, and now they're going to have to maybe not put as much on those barges once again, and that's going to lift the costs again.
Absolutely. Well, we're going to a winter pool, so a lot of our, especially here in Tennessee where we don't have any natural lakes, we have lots of dams, and so we raise and lower those waterways through that, and this is fixing to be winter pool for you, for the Tennessee states, and so it'll go down pretty low.
Winter pool.
Winter pool, that's what they call it.
Something you don't hear too much in the
Get to find a lot of good fishing lures when it's winter pool.
Yeah,
so
in the plains, you just are happy to have a pool.
Yeah.
Let's talk about the wheat then. What's going on with it?
Probably renewed moisture coming in and additional acres, just keeping it soft. And a lot of the issues overseas in the Ukraine and Russia have just kind of melded down into maybe not a ceasefire, but they're just kind of hacking one another to pieces right now instead of big major bombings on the ports that would interfere with that traffic.
So on these outside markets, we've been talking at times about the Fed and the fact they left the interest rates the same and everything. They have one more decision before the end of the year, right?
That's correct, yes.
So they still could maybe move it up or down, maybe.
They could.
But would that have much impact during this time of year on the commodity trade?
Yeah, it would, simply because it's been so egregious to everybody having the rates raised and raised and raised. So I think it would if they did raise it. It seems to me like they're not going to raise it right now. I think that through the conversations that they had afterwards, seeing the markets react to it, we've seen the bond market perk up just a little bit now. The energy market has sold off $8 or $9 in the crude oil, sold off a little bit in the gasoline. So now we see if they catch a bottom and start moving back up again. And I kind of think that's what they'll do.
In fact, now that you mention that, let's take a look at that. Let's go to crude oil trade, West Texas crude, not Brent. This is West Texas. December is now 85 cents higher, so it's back up to $78 a barrel, if I can get that spit out here. So we're a little higher there. And if you look at the diesel fuel market, of course, they trade on heating oil futures. 5 cents higher again today, Chris. December now at 279.3 per gallon. That's on your diesel fuel futures. Of course, if you're worried about your car fuel, it's up a penny and a half at 220.5 per gallon right there. All right, we'll come back and we'll see how that livestock trade is doing in just a moment with a little help from this guy right here, Chris Swift. We'll be right back. Here we go again. We're going to take a look now at our livestock trade on a Monday morning. Started out firmer here across the complex. Cattle were higher, hogs were higher. Live cattle right now, well, nearby December is higher, is up 27 cents now at 174.45. However, it's really losing steam fast here. February got as high as 175.35, and now we're back to 174.62. Now we're down 2 cents on the day. April is up just a dime, so whatever we gained early on there is pretty much vaporized already this morning. On the feeder cattle side, here we had pretty strong gains there early on this morning. I mean, it was way over $1 higher on January. And now we're only 42 higher. We're at 226.97. We've already come off of our earlier high of the day by about $1. March is now up 15 cents is all. And heck, April is unchanged. So things sliding away here in the cattle market as we get about 45 minutes into it. On lean hogs, kind of the same thing, really. We have December only a dime higher at $72. February up just a nickel at 75.62. And they're kind of narrowly mixed on the deferreds beyond that. So, Chris, this cattle market, it started out, it was flexing its muscle, and now it's just kind of turning into a piece of fat. What happened here?
Well, a lot of it hinges from last week's big losses. So the futures market has seen tremendous losses over the last several weeks. That's all just a difference in change in basis more than anything. Cash markets have softened a little bit in the feeders, they've softened a little bit in the fats, but no real big decline. So this is just a big basis change. For producers out there that were not liking the high premiums that futures were, they got a really good opportunity now to buy cattle a tremendous amount cheaper on the board than anything they could in the cash market. So I think it's just a little change of basis here, and it gives some different participants in the marketing sectors there a little bit of an advantage that they didn't have earlier in the year. Real high premiums in futures. It kept the cattle feeder from being able to hedge feeder cattle out there. Now it's been very beneficial for the cattle feeder to do it. Packers couldn't buy cattle because they were always higher in the futures, so they bought them hand to mouth. Now they can go in and buy futures.
Interesting. All right. And so you don't think the cattle on feed report has everybody sitting on their hands right now? Well,
it might, but I think it's pretty much known it's going to be a little bit higher. It probably could be equal to September, might be a little bit bigger than October, but I think everybody's come to, that's why I think we were down all last week. It's come to realization somebody has stepped in and said, I want a piece of that dollar, and they've tried to put more cattle on feed.
So now they're kind of leaning that way, apparently. All right, we'll see what happens, and that will come out late this week.
Yes.
All right, thanks a bunch. That's Chris Swift of Swift Trading with us here in studio in Nashville. Tammy, back to you.